we're back with another supply and demand trading video, except this time we're going to be talking more about market structure, and this is one of the more advanced concepts that, I wanted to talk about because it is very critical on how you interpret the price action on the chart, and it also lets you be a lot more creative when it comes to entering these trades and tightening up the risk by a crazy amount. All right, so this is pretty important when it comes to trading. So before I get into that, I'm just going to do a quick summary who I am. 21-year-old day trader. I'm still in college. This is my last year. I've been day trading since I was like 18, so it's like 3.5 years now. And just in high school, I didn't really know what I wanted to do when it came to my long-term career, and I decided, why not just pick the hardest job in the world to become profitable in, all right? And I decided to torture myself with day trading. So yeah, day trading was my thing. Took me about 3 years before I even made a single penny from day trading. So yeah, it was definitely a rough battle. But this summer, everything just started fucking gaining momentum, and this is the highest income summer I've ever had in my life. 3 months, I've made close to, including my W-2 job, I've made close to 20 something grand. So you do the math on how much money I've made, or how much money I should have in my bank account. But either way, point is, most money I've ever had in my life when it comes to bank account, when it comes to my trading. And I'm approaching my 20th payout. I'll go show you. Oh, fuck. Okay. Well, you know what? You guys aren't seeing my Lucid because I'm too lazy to edit, and I don't want to fucking, and fuck me. Okay. Change that. Hopefully I didn't leak anything right there. But anyways, yeah, I'm not logging my Lucid, but here are my payouts from Top Step. Top Step is where I've had the majority of my payouts. Lucid, I've had close to 5 grand. I have 9 payouts on Lucid. All right, I know that because I counted it literally literally this morning. It logged me out. I'm 1 payout away from 20 payouts. On my Instagram, you can see all the proof of payouts. And anyways, let's get straight into the video. I low-key yapped a bit way too much. So, let's get right into the video. All right, so understanding the fractal nature of candlesticks. All right, so what is being fractal? The definition of fractal is it is complex, never-ending geometric patterns that repeat itself at different scales. So essentially, if you look at a picture of a triangle, right, you can see that if you were to divide it up into pieces, you can see that this one triangle could actually be 4 triangles. But in these 4 triangles, if you split it up into like these 2 pieces, it could be 12 triangles, right? And the main point that I'm trying to get at is that on the candlesticks, it shows a combination of candlestick. So a 15-minute candle is 3 5-minute candles, 3 times 5-minute candles, okay? And then those 5-minute candles are, each of them are 5 1-minute candles. But that also means that 15-minute chart, or that 15-minute candle, is 15 1-minute candles, right? And that is super important when it comes to understanding how price moves, because then you get to see the same pattern appear on lower time frames and higher time frames, and you can essentially work backwards. All right, that is super important to know, because that's why a lot of these trading guys, they always tell you start from the higher time frame and work down to the lower time frames, and you can do the same thing with the lower time frames and get a higher time frame magnitude trade, right? Magnitude is heavily affected, or is heavily influential to how price moves, right? The higher the time frame you're in, the bigger magnitude, bigger scale, bigger move price will have, right? So a 30-minute chart, I guess I'll just show you, fucking fly flying around. I'll show you how to interpret it on the chart. So right here, we can see that we're on the 15-minute chart. So let's just say that there is a supply zone right here, okay? This supply zone, if I were to get rid of the time frame completely, you guys wouldn't know whether this is a 15-minute chart, 5-minute chart, 1-minute chart, right? The point is they all look the same. But when the time frame is revealed to you, you'll see that inside this basing formation, you will see that it is a combination of, let's go to the 1-minute candle. Let's see how the 1-minute price action moves. Okay, so in the 15-minute, you can see that price moves very clearly. It is just drop, base, base, drop, right? And that only took 2 candles to do. But in the 1-minute chart, you zoom in, you can see that in the 1-minute chart, it took 45 1-minute candles of just back and forth, right? You can see this back and forth action. So that means in the lower time frames, this looks like price is just consolidating, but on a higher time frame, price is actually basing. So the reason why I talk about magnitude as well is because the magnitude of this zone is about 45 points, okay? But we go to the 1-minute chart. If we were to find a supply zone, which, let's see if I can find one real quick. Okay, there's one right here. There's a 1-minute supply zone right here. This supply zone 1 minute is only 8 points, all right? So we have a 1-minute supply zone who had the exact same pattern as this 15-minute supply zone, except the 15-minute supply zone is about 5 times the size. Do you see how that could lead to a very clear read on where price wants to go when it comes to looking at the magnitude and the fractal nature of price, right? So let's go back to Google. So anyways, that's what it looks like on the charts. So you can see that they're all the same. Like a 15-minute candle is just 3 5-minute candles, or 15 1-minute candles, and the 15-minute could be, you could have 4 15-minute candles for one 1 hour candle, right? It works both forwards and backwards, and this matters because it helps you understand how price moves, the scale magnitude of the moves, and how price really forms a reversal. Because nothing on the chart, all right, if on the 15-minute it is showing us that we are bearish, right? The only way you can catch a long move, a full-on reversal, is by analyzing the lower time frames and seeing bullish breaks of structures, bullish demand zones, bullish price action on a lower time frame. Because that lower time frame price action, this tiny little upwards move in the grand scheme of a bigger move to the downside, that if you enter somewhere here, this move could easily turn into something that looks like this. A full-on reversal V that turns from what you thought was just a continuation into a full-on reversal. That is why understanding the fractal nature of price is so important. So go back to our thing here. So yeah, how price really forms a reversal. So again, like in this move here, you can see this on any time frame. Again, this is why understanding is so important, because on this time frame here, it looks like price is just trending down, but eventually you will get a reversal setup, which if you look at just this little section right here, this looks like a this looks like a swing high. All right, this swing high gets broken, we get a break of structure, we get bissies. Okay, now if you have the right amount of context, you can get onto this long trade, which, you know, you would think that if price is downtrending, the most upwards movement it can do is like up until here, and then before it continues, or up until here until it continues, right? But what actually happened was, again, what I said earlier, a full-on reversal, because this lower time frame reversal structure turned into something greater, because it all starts from the lower time frame, and the higher time frame gives you the context that you're looking for these high RR trades. That's how you apply the idea of fractals into your trading. It gives you high RR schematics, and it also refines your entry models, because whatever happens on the 15-minute chart, it can happen on the 1-minute chart. The success rate differs very widely because of the magnitude of these different time frames. The 15-minute chart is going to be much more powerful than the 1-minute chart. And additionally, you'll also see a more repeating patterns on the 1-minute chart than the 15-minute chart, because overall 1-minute candles, they're going to print 15 times more often than the 15-minute, right? So you're going to get a lot of false signals. But if you have mastered supply and demand enough to the point where you can read the lower time frames as well as you can read the higher time frames, you can use the lower time frames to get these high RR, very accurate, very precise entries, right? Because if you happen to miss a move, all you have to do to join that bigger time frame move is drop down to a lower time frame, see the exact same pattern on a lower time frame, and then just join the trade. Here's an example. Say we're downtrending, okay? And then on this time frame we get a reversal structure. Let's say you miss this long move up, okay? You miss it. Just drop a time frame, watch it and see if it creates another reversal structure. Boom, let's say right there was a breakup structure. You join in on this move before we even break structure on a lower time frame. Like, this is where you drop time frames. You are now joining lower time frame bullish when it is higher time frame bearish, but this higher time frame bearish turned bullish because eventually you break this swing high, and now you're already in the trade down here when price is now showing bullish. And that is how you get these high RR trades. That's how you enter all these trades with such high precision, right? The two pillars that you improve the most by learning the fractal nature of price is your profitability and your execution. And that's pretty much the most that I have to say when it comes to understanding the fractal nature of candlesticks.